Assalamu Alaikum everyone, welcome back to another video. I hope you're doing great. In today's video we are looking at AstraZeneca. AstraZeneca has been one of the companies that have been in the red for quite some time. A lot of people have been wondering what basically I'm doing with the company. I've got a few questions. A few brothers have said, what are you going to do with the company and so on. AstraZeneca is a global and science-led pharmaceutical company focused on discovering, developing and delivering innovative prescription medicine to over 130 countries. They're one of the biggest, if not the biggest company in the United Kingdom. The UK based company. They have a research based research center in Cambridge in the United Kingdom, as well as in Sweden. And they have been in the portfolio for quite some time, and they have been in the red. So what I'm going to do today is go over some of the basic information, as usual, give you the financial details about the company. I'm going to use the US, the UK version. The UK websites for doing research is not the best, so I'm going to use the US listed one. So the one on that's trading in the the New York Stock Exchange, if I can speak. So I'm going to use that information, and then at the end of the video I will show you how much, using simply Wall Street, I'm going to show you how much they think the price should be for this company moving forward. But everything else is going to be in dollars, so apologies if you are based in the UK. Okay, so we're going to talk about the financials, then we're going to talk about valuation, then I'm going to show you how you performed against the S&P 500, and then what I will be doing into basically moving forward when it comes to this company, inshallah. But before we do that, there's two things I would like you to do right now. Press that like button, subscribe to the channel if you haven't, because there's about over 50% of you guys that watch the videos regularly that have not actually subscribed to the channel. So just subscribe it first. Then, of course, if you can join us in the Patreon account, where you get access to a lot of things, including the family portfolio, including the subscriber portfolio reviews, which I have been doing. That's a new thing that I've been doing. Honestly, probably one of the best I've ever done, because I've learned so much from you guys, showing me your portfolios and what you invest in, why you invest in, and giving me a breakdown of the things that you're doing. There's the two reviews that I've done in the last 48 hours, and I was absolutely amazed. 20 plus years brothers who have started their journeys already, 50,000 plus, one in the US, basically in US, one in the UK, and both of them are doing absolutely amazing job with investment. And they also, not only that, they understand why they invest in the stock market, what it is that they're after, and they're not chasing those high flying companies. They're not chasing high yielding stocks and so on. They have a very balanced portfolios between dividends, as well as, of course, growth companies and some ETFs. One of them had actually 60% in his portfolio was actually ETFs, and 40%. And he said, I don't have a lot of time. I'm working in the US, and I've got so much going on right now. I just need sleep well at night sort of investment. And that's exactly what he's doing. So like I said, I'm learning so much from a lot of these brothers, and mashallah, if they continue doing this, I promise you, by the time they're in their 30s, mid-30s, they will have at least like 500,000, if not more than that, invested in the stock market, if they continue and genuinely be serious about this. Don't just to chase all of these penny stocks and meme stocks are back again. It's ridiculous. Anyway, I'm getting sidetracked, but it's just so many things. It irritates me when I see a lot of brothers messaging me, oh, what do you think about so and so? I'm like, no, just stop. Just don't message me these stupid things, because I will never invest in these companies. I'm not saying you feel free to do that if that's what you want to do with your money, but I'm not investing in a penny stock where I can't understand the fundamentals of the business, or meme stock because someone said we should invest in this company so it goes to the moon and then make it. I'm not after that. I'm just like slowly trying to build wealth, generational wealth. That's what I'm after. So yeah, let's inshallah just be in the lookout, inshallah. And if you can join us, of course, it will be absolutely amazing. Let's now talk about AstraZeneca. Like I said, I'm using the US version of this company that's trading in the Nasdaq. It's not in the New York, it's in the Nasdaq. And as you can see here, for the last 6 months, basically it's up about 3%. A year to date, it's about up 10%. But for the 1 year, it's down about 7%. So it's been hovering around. So right now is closer. Look at the high, basically the 52 week high, $87. Let's call it about $88 per share. And the lowest it's been basically $61 per share not long ago. So let's look at the financials of this business. Again, I'm just going to use some of the information. Some of the dividend information here might not be accurate, especially for this company, because a lot of the UK companies, that when it comes to Simply Save dividend, does not have accurate information about some of these companies. But as you can see here, 225 billion market cap, over 2% dividend yield. It looks basically undervalued at this point in time. 70% safety, A+ is basically credit rating, which is strong, which is really good. The payout ratio is quite low, 36%, 25 years apparently off without reduction. So that doesn't mean they've increased it, but they haven't reduced it for 25 years. And the last 12 months basically increased it 7%. The last 5 years is just about 2%. Again, I like to use another company called Dividend Max for UK companies, but you can see it's been up and down for whatever years, for the last basically quite a few years. So I'm not really too bothered about basically where it is right now in terms of dividend side of things, because they do pay solid dividends. Okay, that is $1.52, and I will show you exactly how much that is in pounds in a second. And with regards to earnings, with regards to the earnings payout ratio, as you can see, is declining, which is really good. I like that. I like the fact that they getting back some of their net income and not paying it, a lot of it. Look at that, at one point it was 80%. That's not sustainable. You want companies that are paying it basically, 10%, 20%, 30%, 40%, maximum 60% of their net income as a dividends. If we look at the earnings per share, it's basically growing nicely since 2020. It has been actually growing even better. The company has invested a lot in basically in China and other places to grow their revenue. They were expecting that revenue to actually grow and basically become double basically than what it was. I think they got the target 2030. I can't remember when they said, but they were targeting double revenue by the 2040, I think it was, or 2030, I think it was. Anyway, free cash flow per share is heading in the right direction. It's slightly declining in the next 12 months. And when we look at the shares outstanding, it's more or less the same. It's stayed more or less the same over the last whatever years. And total sales for this company has also been going the right direction. In terms of return on equity, we're looking at about 20%, return on invested capital of 14%, operating margins 25%, and free cash flow margin of 17%. And debt levels are very, very low, which is quite nice to see. So that's the financials of this company. Just want to show you a couple of other things. With the financials especially, so how much they're making against how much they're spending. They do spend quite a bit, this type of companies, but $45 billion of that basically 54 is actually become a gross profit, which is really nice. But they do spend a lot of money on research and development, and rightly so, because they are pharmaceutical companies. They're always doing research to find the next best drugs and so on. But $7.7 billion of that became free cash and net income, which is nice. Final thing I want to show you from the financial side of things is the debt levels. So we need to see the current, not the current, we need to total basically assets, which is $106 billion against the total liabilities of $65 billion. So they've got basically enough assets to liquidate if they need to sort something out. So that is the financial side of things. Now I'm going to show you fast graph and show you basically how the company has performed against, I'm going to show you the valuation first, and then I'm going to show you how they performed against the S&P 500. And looking at the valuations, let's go to we are using Interactive Brokers. As you can see here, I'm going to click financials, and the Refinitiv is basically saying about 38% upside from where we are. $101 per share is where they think the price should be. Now, if we look at the for example, things like tip rank ratings, we've got 5 strong buys. So there are no holds, no sales, and there's not a lot of analysts looking at this company, but it is a strong buy. That's about 23% upside from where we are. About $90 per share is where they think price should be. The next one is Morningstar. You can see here we've got 4 stars. Is wide moat right now, $78 per share. And again, we've already seen that $72 per share. So it is right now, based on this, is basically it looks like it's a buy because of 4 stars, and a wide mode, exemplary when it comes to capital allocation, which is nice to see. And now we're going to look at Fast Graph. So Fast Graph is one of the websites that I have been using for quite some time. And if you click history, for example, you can see how the stock has performed over the last whatever years. This is basically the earnings side of things. using the adjusted operating earnings, you can see this stock, there's been a lot of times where this stock has been undervalued, but then it's gone up again, and now based on this, it kind of looks like it's actually coming back again. Now let's have a look at the performance side of things, how it actually performed against the S&P 500 over the last whatever year. So if you invested 10,000 US dollars against it, basically the S&P 500 is like almost identical. So you basically, what you're buying is a company that is performance wise almost bar with the S&P 500, and then when it comes to dividend side of things, more or less the same. So you're not outperforming the S&P 500, but you're getting more or less the same as the basically the market, which is fine, because as a Sharia compliant investors, then that's fine with us, because you can't buy the S&P 500 as it is. So, but if you can get companies that give you more or less the same, then happy days, alhamdulillah. What have you got to worry about? Now looking at the forecast moving forward, if you look at based on the estimates that basically we see here, with just 10%, 13%, 12%, if we click this, okay, this should now tell us how much basically we'll be losing or how much we'll be making. And as you can see, our 10,000 will become $12,390 per share. That is total annualized rate of return about 9%, which is fine. So 9% for your money every single year using the estimates, not bad at all. If we use the normal estimates for this one, you can see 74% total rate of return, which is absolutely amazing. So $17,481 per share is what you will be getting. Now, if I go back to summary, for example, and scroll down, I'm going to show you basically using the normal estimates, they expect the price to be about the fair value price for this company, about $65 per share. The currently is there, and the future stock price will be about $86 per share. Now, 86 of course is higher than where it is. That's why we saw that little bit of growth. But if we use the 500, where it has been the 5-year normal multiple for this company for the last, where it has been over the last 5 years, that basically we are expecting the price to be in about 3 years of $123 per share. So again, like I've always said to you guys, give yourself about 10%, of course, a margin of safety, and take from there. So what am I doing moving forward? I am not selling this company. As you can see, I'm just down about less than 1%, less than 2%, 1%, I think it is. My basically price right now, or average price for this company is $109, £109 right now. So, and it's there, it's almost there. So what am I doing? I'm holding on to this. I'm just collecting these dividends that you will see. If I click history, you will see that they have been paying me dividends over the last whatever years. So I'm going to continue collecting that dividend. I'm going to continue holding on to it for now. I'm not adding to it anytime soon, because I think I've got 40 shares or so. There you go, 40 shares. So I'm not going to touch it, because I'm building positions that are very similar to like Novo, for example, and Merck, that are slightly cheaper right now. So yeah, that's my take. That's the company that I want to talk about today. If you haven't pressed that like button, please do so. It takes a lot of time and effort to put these videos together. And join us in the Patreon account to support the channel, inshallah. Have a wonderful day. Assalamu Alaikum.